value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, thank you. It's great to talk with you.
Mike, has that polar vortex reached you in Virginia?
Well, it's supposed to possibly snow next week a couple days, but it's a lot colder in the Northeast. In fact, it's snowing in Atlantic City as we're speaking, I believe. But I think I'm missing most of it.
Yes, well, here in Canada, we, of course, have the polar vortex. It's even affecting us here on the West Coast, although at -1 or 31 degrees Fahrenheit, you can't really say we're freezing to death out here. In fact, when they did a story on the national news, it came into my neighborhood where the flowers are blooming and there's palm trees.
Oh, that's funny.
Yeah. Somebody just posted on Facebook a picture from someplace in Alaska. The temperature sign outside the liquor store said -76.
Wow, that's scary.
Yeah, so
I've never been somewhere it's that cold.
Yeah, well, it's probably with the wind chill. I have been at -65, and again, in Fahrenheit or Celsius, that's about the same. And when it's that cold, physical conditions, it's like being in outer space. Gasoline becomes a jelly, propane is a liquid, your tires will stay flat on the side that they were on the ground. Once you get your car started, using a blowtorch to warm up the oil pan, you have to keep it running or the moisture in the exhaust system will crack the engine. So, yeah, it's totally different. And I actually froze my ears solid because I forgot to pull down the ear flaps on my hat, walking 1 block from the school bus to the school. So, yeah, when it gets that cold, it's super scary but interesting at the same time.
Well,
Mike, what are the day traders targeting? I mean, they went after Reddit and boosted that because they didn't like naked shorting. And are they going after any other shares now to try to boost them to unusual heights?
Well, when we last spoke, the silver thing was all in the news because there was talk on this Wall Street Bets Reddit board that was getting all the attention when it came to GameStop and AMC and some other stocks. Then they decided they're going to try to short squeeze silver, and silver just gapped up Monday last week, and then all those gains in the open, they were taken away, and now the metals have stabilized since then and look just fine to me. So all that appears to be basically noise in the longer-term trend for the metals. But what I was reading this morning was that on this Wall Street Bets Reddit board, they're now targeting cannabis stocks as things to buy, and some of these stocks have gone up as a result. And I think I'm not interested in buying them personally. In fact, last week, the Monday that silver gapped up, and I own silver in various silver mining stocks, it was nice to see it open up. But I wrote an alert in the morning saying, I don't believe this short squeeze is going to happen, and I wouldn't buy anything hoping it's going to have a short squeeze or based on what the people on this message board are talking about. I think what we're starting to see is that, first of all, short squeezes themselves, it's not really a great investment strategy because you got to get out to take the profit. They're just short-term swings that can be generated, and if you're not buying something that you believe in, there's no way you can hold it. So you need to buy in things that you do believe are real, that have a fundamental basis to them, and forget about short squeezes and rumors on message boards. So they're now going to the cannabis stocks. And I think this shows that this type of herd behavior on this message board on Reddit has a characteristic to it where they always have to go from one thing to another thing. You know, they get on GameStop, and then when that trend fizzled out, they started to talk about silver. They couldn't generate a silver squeeze, short squeeze, so now they're jumping on cannabis. And, you know, if they're moving, cannabis isn't long-lasting, they'll have to move into something else. So I think it's a herd that has to move from one thing to another to keep itself excited and stimulated in these markets. And I don't think that's a good trading or investment strategy. I think you got to trade in things that you believe in yourself, and not just because it's gone up, for a couple of days or the message board is talking about it. So as far as myself in a cannabis stock, to me, it's just a sector in the market. It's nothing that I've personally, devoted a whole lot of money into. I just kind of watched it, from the sidelines, and maybe I bought one or two cannabis stocks. So it's never been a sector I've been myself personally heavily invested into or really had a big interest in. And I still feel the same way about it.
With this kind of mania, I know we talked some time ago about with casinos shut down, adrenaline junkies were looking for a new thrill, and they found it in the stock market. Is this the same crowd of people or the same kind of people who like that instant gratification, seeing a stock jump from $5 to $400?
Yeah, I think so. I mean, they're not getting in at $5, but it's the manic behavior in the stock. Some people, I can speak from my own, I guess, experience in the markets. When I started trading, I was younger, and obviously, but it was over 20 years ago, so I was much younger than I am now. And I wanted to see big swings. I thought that's how you made money, was generating a big swing in your trading account. So I would take big positions in highly volatile stocks to get that, to have that happen. And you do experience more adrenaline or stimulation when your account swings a lot in a day. And I think a lot of the people, the people who are heavy gamblers, that's what they're doing. They're making giant bets on sports or whatever it is to feel that. But once you get older, at least my experience, I don't want to live my life like that. And I'm more content to have smaller movements in my investment account and have it go up slowly over time. And for me, that means smaller positions and also buying things that I'm going to hold. And I'm only going to hold stuff that I really believe makes sense from an investment standpoint. So that's one reason I know I'm a big crypto downer when I ever talk about it on your show, and other people don't like to hear that. But it's my perspective is I only want to invest in things I can hold, and I don't feel any confidence in holding cryptocurrencies because they don't pay a dividend. You're not buying an interest in anything, like you do in a stock. You have ownership in a company. You just have a virtual currency. And I don't want to invest in virtual currencies. I own U.S. dollars and some foreign currencies, and I don't particularly enjoy owning them, but I do. And I wouldn't enjoy owning a cryptocurrency any more than them. It would be even worse because crypto is so volatile. So I guess what I'm trying to swing back to what you're really asking me, is that people approach investing, speculating, trading with different perspectives or motivations, and as time goes on, I think most people, you got to slow down, and frankly, it's easier to make money when you are taking smaller positions and being more diversified. It actually becomes easier to make the bigger money that you think you need to take the giant positions and bigger risks in. But that's how a lot of people start out in the market. That's how I started out. You know, you try to make the fast money, I guess. In fact, the idea is so popular, they even have an entire CNBC show called Fast Money, because it's a giant desire. And there is a niche of people always in the market trading with that mentality. And obviously, you know, the GameStop play, that's what it attracted. And AMC was another stock that they shorted, that same message board. And it's so many people that were, you know, motivated by this type of thing that GameStop became the 12th must-own stock on Robinhood as far as 2 weeks ago. AMC was number one, and so forth. So, you know, there's always a giant element in the market that is engaged in huge speculations and risks. I mean, we got record margin debt in the stock market, which is an amazing thing to consider. Record margin debt. And one thing I would like to say about that is next week in the United States, the Senate in the House is going to hold hearings over trading in the markets and GameStop and brokers and so forth. And 2 weeks ago, there was a big outcry because Robinhood had to limit the number of shares they would let anyone buy in GameStop. And, you know, there were all these talking heads and radio hosts in the United States that were using that narrative to say that the little guy in the market's being victimized by brokers who are trying to defend hedge funds and so forth. And that's a false narrative, because what Robinhood was doing was being forced to limit the amount of trades people are making in these highly volatile stocks that were doomed to go back down, and they did, because they allow their customers to go on margin, as all brokers do, and they operate, therefore, as de facto banks. So they take a risk, you know, when people are taking these giant positions in these stocks, and if they let too many people do it and the trades go bad, then the whole brokerage firm could collapse. And Robinhood wasn't the only one. Ameritrade, E-Trade were limiting the trades in these stocks. So there's a theoretical risk that if GameStop kept going up and more people piled in using margin, that it could have actually crashed many brokerage houses in the United States, which would have meant the complete liquidation of millions and millions of customers that aren't doing anything risky. Because if a broker goes under, then all the accounts go under too, and they're only insured by, I think it's $500,000. So massive losses would have happened. Be just like what happened in 2008. Not as big, but a giant wipeout that would have impacted tens of millions of Americans. So this was the risk, you know, that was theoretically could have happened with that GameStop situation. So it wasn't a story about the little man being victimized at all. It was about brokers being forced to step in before risks got out of control. So I say all this because I want to make one point. Right now, in the markets, there's record margin debt. There's record call buying among individual investors. Both of these are extremely speculative, extremely risky behavior, and they lead to rapid and sometimes deep corrections as a result. Now, I don't think the stock market is about to have a rapid correction right now, but it could before this year is over. And if not then, certainly by next year. One is going to happen one day. And when it does come, the record margin debt is going to result in making that correction potentially brutal. We had a 20% decline in the fall of 2018 and over 33% last spring. Something similar is going to happen because of this record margin debt. And I say this because next week we're going to have these congressional hearings and lots of claims and arguments made against these brokers, and I'm considering, I don't know if I'm going to do it. It's almost just pointless and becomes an exercise in only trying to draw attention to myself, but which is sort of silly. But if enough Americans could write letters to the senators that are going to be and the congressmen that are going to be on these investigative committees, and would just tell them, look, the biggest thing you got to do is get the brokers to raise the margin requirements. Raise them and limit people's margin debt. Forget about this thing about GameStop and, only allowing people to buy 1 or 5 shares. That's 2 weeks ago. The biggest true risk in the financial markets is record margin debt. And to prevent it from becoming creating a horrible, counter problem or correction, raise the margin requirements now and do it. And if that sounds spooky, you don't want to immediately make people sell. Just raise it 1% every month. Raise the margin interest the brokers are charging people 1% a month. It's like most brokers, I think they're charging like 8%. If they raise it 1% a month, they could get that over to 20%, within 12 months, and that would force people to get off margin. That's the biggest risk in the market now. And if the brokers would just jam up those margin interest rates slowly over a year and eliminate the margin debt, that would do so much to lower the true risks in the market. If people would just get together and ask for that to happen, and that's why I was thinking about writing an open letter to the senators and congressmen saying this, and maybe people would read it and they would take action. But I feel like it's futile. They're not going to listen to me, and then probably the masses won't do it. They want the opposite. They want more cheap money. They want to keep speculating, but they're luring, I believe, the markets into ultimate disaster. But you try to help these people, tell them to get off margin, beg the brokers to raise the yields to stop them. But maybe I'm just dreaming saying these things.
Well, Mike, you have nothing to lose by writing to the politicians and everything to lose if you don't.
Yeah, I guess so. There's nothing to lose. That's true. Just 30 minutes of time, but I waste time anyway, huh?
We'll have more with Mike Swanson right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Welcome back. We're speaking with Mike Swanson. Mike, how's the commodity market doing?
Well, to me, it's the best spot in the markets completely. And I say that with someone that owns foreign stocks and, all kinds of stuff. But we've seen over the past 6 weeks, energy stocks come alive. For instance, Exxon, which I own, it's done well, and it's still paying a roughly 8% dividend. But the neat thing about the energy complex is there's many, many, many stocks in it that pay big dividends. So it's come alive, and historically what we see in a commodity cycle is precious metals go up first, then soft commodities like agriculture go up next, and then energy last, and then there's something after energy, which I'm going to get to in a second, which I think is still a great opportunity. But we've seen this pattern play out right in front of us over the past 10 months. Really, before that, gold and silver started to come alive a couple years ago. But last year, copper exploded. And when it comes to agriculture, many agriculture stocks exploded too. And then finally, the energy stocks came alive at the end of last year. So the historic cycle is repeating. And when you see historical cycles repeat, that's good confirmation that what you're seeing is really happening. So I'm confident that this trend is just starting and is going to continue for a couple of years. And since it's just starting in the past 6 weeks of energy stocks, that would mean that even though they are up this year, that we still got a good relative entry point. They're not like on near 52-week lows, but it's still a good time to buy. However, there's one sector in this historic pattern that tends to go up after the energy stocks, and it's like the very last thing to go up as far as stocks go in this cycle, and that is shipping stocks. So, and these are companies that do bulk container shipping around the world, oil tanker companies, and so forth. And this is a sector that's been in a bear market for going back to really 2011, and made a bottom about a year and a half ago, and went up and then crashed back down last spring and continued to trade weak, and now looks like it's starting to turn up like the energy stocks did in early December. And it's not like 100 stocks in it, more like 20, but some of them pay big dividends, and it's a sector that when it goes up, the stocks in it tend to double or triple. So that's what I think is perhaps the final, sector to buy that's about to enter a potential bull market. Just about everything else already is in a bull market. This sector, though, most of the stocks are right on the 200-day moving average, where everything else is above that level. So to me, this is the last type of buy I like to do. I don't think I'll see another one, line up like this for the rest of the year. And it operates over 100 vessels around the world, and it's paying around an 8% dividend too. But people can look up without much trouble, just type shipping stocks and look through them and see which ones kind of interest you. But again, this is the last thing I see. The agriculture, commodity sector, it really went up, bottomed, and started going up in July, August. Oil, everything's just going up. Most foreign markets are going up, just about everything. So this is like the last thing in this type of position, and after that, to me, I'll just be sitting here waiting for a sign that we're about to see a market correction, and then I'll start hedging. But I don't see a sign of that now. So that's the only thing I really got left to do, except the little stock here and here on the margins.
We'll have more with Mike Swanson right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, what about tourism-related things, cruise lines, airlines, hotels? Of course, they're in a deep, dark abyss right now. Canada has banned cruise ship activity for another year. I guess the government in Ottawa doesn't have any confidence in its own vaccination plan. Are those stocks, as long as you kind of feel a company isn't going to go bankrupt, are they something that's going to, at some point, really bounce up when people get confidence and start traveling again?
Well, those sectors have, the stocks have bounced. They're just kind of sitting there for the most part, but they basically bounced last spring, then kind of fizzled out, and then they started to come alive a little bit in December or November after the vaccine news was first announced. Now they're kind of doing nothing. But the way I feel about it is the cruise line things, I have no interest in trying to buy them. Again, when I buy something, I like to think I'm going to be able to hold it for a year. And the problem with that sector is, first of all, that's probably going to be the last one that really turns around, because it's not really clear when it's going to be. Is it going to be at the end of this year? Is it going to be it looks like it's going to be in the fall now, where, say, you may be able to pack sports arenas. So I would think that's when you'll have the time when more people go on cruises, but it could be next year. But the real reason I shy away from that one is that cruise line industry, it's heavily indebted. You know, they've in so much debt to build these vessels, and they haven't paid dividends in the past couple of years. So, and who knows when they ever will again. So that's the one I don't have much interest in. Airlines to me is just a step above the cruise lines. You know, historically airlines crash and going bankrupt even in good times. So the one I would say is the better one to invest in would be hotels, and real estate, companies that are involved in that industry, because historically they do pay dividends, and I think they'll come back quicker, and they've gotten these PPP loans and stuff to keep themselves afloat. Sort of the same story with casinos. You know, casinos, they raised billions of dollars through the corporate bond market last spring so that they would have enough money on their balance sheets to basically sit there and generate, you know, stay in business even with no cash flow through at least the rest of this year. So I think they're in a position to weather the economic situation, not go bankrupt, and, you know, if they needed to raise a little bit more money, I think they'll be able to, and things would come back, you know, by the end of this year, next year anyway, for them. At least they'll start to get a positive cash flow. So I think the casino industry is okay to invest in, and you also do get dividends in most of these casino stocks. Even now, you know, they raised enough money to keep paying the dividends. So, and there's various hotel chains basically in the same situation, such as Marriott. I don't own any of these stocks, but if I was going to make a trade, you know, in that industry, that's where I would do it. Frankly, you know, I would be interested. I would like to buy these things, but I'm already invested in enough for now, and I'm just going to be patient for whenever there is a correction in the market. Then I might take a look at that stuff myself. But you know, it is an interesting. I think that's the spot to look at.
And Mike, you've contributed enough to the casinos whenever you enter a poker tournament.
Yeah, well, I'm a small fry in that world, but yeah, I would like to go, you know, 2 or 3 times a year and playing poker tournaments, and so that's why I got a feel for that industry. You know, I'm a customer. That's where I like to go on vacation and stuff. So now, I'm not a cruise line guy, so I guess that's why another reason I don't want to buy cruise line stocks.
Mike, thank you so much for chatting with us.
Thank you. Good talking with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.